The currency market virtually stood still all Friday long. No wonder the economic calendar was completely empty both for the Eurozone and the United States. However, first, the CrowdStrike update caused a technological collapse around the world. Then, Joe Biden announced his withdrawal from the presidential race. The market's reaction to the US president's statement once again confirmed that another powerful catalyst has joined the monetary policy of the US central bank and the difference in government bond yields. The political situation in the US is set to heat up as the November 5 election date approaches. Currently, markets are trading quietly, responding to Biden's decision announced yesterday. However, Joe Biden's resignation was widely expected, and Donald Trump remains the frontrunner in the presidential race. If current Vice President Kamala Harris is appointed as the Democratic candidate, the pre-election balance of power could change greatly. The first woman and the first black woman on South Asian descent, she could win over female voters, consolidate black support, and make the debate with Donald Trump much more lively. Now the risks looking less advantageous compared to her. Last week, the S&P 500 tumbled by nearly 2%, largely due to the collapse of CrowdStrike shares. Its shares plummeted by 13% overnight. But today, US stock futures are rising. The S&P 500 index is consolidating within the intraday corridor of 5,497 to 5,558. The US dollar, on the contrary, dipped slightly on early Monday. Its index traded within the intraday corridor of 104.10 to 104.40 in the first half of the Monday. However, it's too early to draw any conclusions about the dollar's reaction to the current situation with the US presidential elections. It's clear that a decrease in the chances of Donald Trump winning should weaken the US dollar and vice versa. Kamala Harris may be the stronger candidate, but is it enough to turn the tide of the vote? Today, Friday's scenario could be repeated since the economic calendar also lacks any significant data both for the euro area and the US. However, now the opposite factors seem to balance each other in the United States dollar. There is no chance for the greenback to tread water. The show must go on. Now, much will depend on the US Democratic Party and how quickly it can decide on its new candidate. In the meantime, the euro-dollar pair is in a correction stage. The euro opened on Monday at last week's closing levels below the psychological area of 1.0950 and 1.10 below. Moreover, the single European currency now considers the critical level of 1.09 below as resistance. Only if the euro-dollar pair breaks through the bullish scenario will come into play. To strengthen the correctional cycle, the bears need to stabilize the price below 1.0850. In this scenario, the instrument could sink as low as 1.0800. Gold is among the assets that have been in favor with the investors today. Its price has jumped to $2,410 per ounce and is trading within the intraday corridor of $2,400 to $2,414 per ounce. The reason behind this jump is a technical rebound after a fall of almost 2% in the previous session and a softer US dollar. Oddly enough, the oil market was also at the mercy of political factors. Moreover, it happened already on a Friday when oil prices rapidly went down. The reason was the statement by the US Secretary of State that some kind of truce would be reached between Israel and the Gaza Strip in the near future. The prospect of easing tensions in the world's main oil-producing region gave investors optimism, which catalyzed the decline in oil prices. However, the situation turned into its opposite over the weekend as it became known about the Israeli Air Force strike on Yemen. So, the increased risks of a new escalation of the conflict across the region, plus the uncertainty in the situation with the US presidential elections, have again turned the oil charts around. Today, we could watch at least a corrective pullback. Besides, the Brent price may sink and return to the levels at which the market was at the beginning of Friday. Thus, the Brent grade closed last Friday below $83. The odds are for a subsequent correction. From the point of a technical analysis, the fact that the price has settled below this level indicates a possible drop towards $80 per barrel. However, strong information background may contradict the logic of a technical analysis. Meanwhile, the Russian ruble is guided more by internal factors. The tax period is entering its peak. So, the US dollar has already dropped below 88 rubles. This trend for the ruble to strengthen will continue until the end of this week. Hence, the ruble-dollar pair the dollar-ruble pair will drop to at least 87 in the short term. Moreover, the instrument will even plunge below this level. That's all for now. We continue to follow news in financial markets. Subscribe to our channel and follow changes in market sentiment with us. See you in our next news release. See you tomorrow.